Hey everyone, this is Will here with Flow Trade Effects. I'm bringing you a new video in the intra-week flow trading system. Today in this video we're going to be talking about sequential targets. Now, why sequential targets are great for intraday trading, and also what we're going to be using as our uh, indicators for these sequential profit targets, or what are going to be our triggers for these sequential profit targets, I should say. And we're going to be talking about the previous swing highs and lows. We're going to be speaking about round numbers, and we're going to be going into the ADR projection, which is a little indicator that we use to display the average daily movement and the daily movement of the day in just a small little numerical display right in the corner of your chart. So we're going to be going over that, and these are all going to be able to help us. Now, when it comes down to day trading or intraday trading, using these intra-week levels, sometimes we'll have a profit target. So that's our take profit. And then we have our entry down here. I'm going to put an E for entry. Now, along the way, for price to get from here to here, sometimes you might get one where price will just shoot straight up, and those happen. Other times you might get a scenario where price continues to move higher and eventually hits your profit target. Other times you will get situations where price is all the way going up here, comes down, comes back up here, fails to break, and then now you're somewhere around here. So all these scenarios are quite common, and this is exactly where we're going to be using the sequential profit targets to exit a significant portion of your trade here, a significant portion of your trade here, another portion of your trade here, and finally the last bit of your trade right here. And along the way, you're going to want to be locking in profits at every one of these levels so that the higher up you are, the closer you get to your profit target, the more profits you've already booked up until that point, so that when you do have your final profit target, you're just closing your final position, which will just be increasing the value of what you've already locked in. But in any event, if the price gets to here and then you close out 25% of your trade, you have now locked in 25% of your trade, and regardless of if this trade comes back here, you're pretty much at break even. At this point, you lock in another 25% of your trade, so you're at 50% of your trade is locked in. The other 50% of that is still running. At this point, you have 75% of your trade locked in as profit. Now you have just the remainder 25%. So if the market comes from here all the way, say, back down to this level, you've already booked in 75% of your profits, and then you have just an additional 25% left over. So where even if you were to go from 25% back to zero, you still profited from 50% of this entire move, which will put you at a net profit. Now, that is exactly why we're going to be using sequential targets to create the best possible scenario to always book everything we can in terms of significant price moves at these and off of these exit levels, just to always make sure that we're both protecting and preserving and building our capital. We're also just making wise decisions as far as managing our trade, because getting your trade to go from entry to take profit, which may be 50-60 pips away sometimes, the price market doesn't always move that much in just one bar or just 2 bars continuously. You do have situations where it does, but not every situation that we enter will likely be getting that reaction. Some of them will, but in this case, we are just going to be looking to make sure to be mindful of closing out at various levels along the way, to where even if price is going to be moving in one direction rapidly, then we could still follow that and be able to close at various levels even as price is moving rapidly in our direction, just to ensure that if price were to continue to hit our take profit, we've already booked some and then we'll finally get out of the market there. Or if price moves up to the 75% part, and as we've seen in the past, ends up dropping back down to the 25 or the entry zone, then we're at least still up net positive for the trade, and we can continue to move towards new trades with a little bit of positivity. Now that's pretty much it for sequential targets. I'm going to go ahead and get into the idea of what each of these exit levels looks like. Got a few little extra dots that aren't going away. Okay, elbow grease, cool. Right on. So next we're going to be looking at the previous swing highs in particular. Now this is where you're going to have, say, price came up, met at a level right there. So you got one level. Price made some sort of resistance right there, comes back up, goes through this level with momentum, and is now breaking back to this level. Now this is a typical breakout continuation pattern where you have an up move here, you have a pullback, and then you have a breakout back in the direction of the main trend, in which price is now. We have a resistance level above here at the recent swing high. We have price coming back down to retest this previous resistance, now acting as support, in which we can get our bounce off of this level. And we zoom into our 15-minute chart to get the first bounce that we get, the first sharp bounce. We look for the first entry signal that we can, closest to this level. Better, the closer to the pip these two lines or these 2 points line up, the better. But at any rate, we'd be looking to, where do you think we'd be looking to set our first profit target? We'd know our stop would have to be a few pips below structure here. If this is where we get our entry, where do you think our first profit target would be set? If you guessed the previous swing high, you are absolutely correct. Now, the first point that price would have to break through if this trend were to continue would be this point right here. So price would have to come from here, bounce all the way up to this point, and then go through this point further for this to be validated and for this trend to continue. My apologies, not validated. Now, given price is down here and we get an entry, we have a relatively tight stop. So by the time price gets here, that's a good amount of pips that we can put in the bank. That'd be our first profit target. Now, beyond that, I'm going to be getting into that next. We're going to be looking at our round numbers, and then we're also going to be looking at the ADR projection to see exactly how and where we would be exiting beyond the previous swing high. But in any case, we're going to set up our stop loss and our profit targets based around the swing high and the recent swing low if we're in an uptrend. Excuse me. And that's exactly how we're going to be determining our first profit taking level based on the previous swing high, which is this point right here, where price broke through the previous resistance, created a new resistance here, acted back upon the previous resistance as support and now is bouncing back towards that area, we'd be looking to exit. In that case, 50% of our trade at this specific swing high, because the swing high is a very significant level to be breaking through. Anytime price meets a resistance, the likelihood of that resistance holding is always a possibility. The likelihood of that resistance breaking through is clearly a possibility in trending scenarios, but in this case, there's no guarantee, and if price does make it there, we want to make sure that we're able to book some profits at that level, a nice significant amount of profits, a good 50% of our trade we want to be closing at this level, and then we look to the round numbers or the ADR projection, whatever comes first, to find our additional profit taking levels in this situation. But I'm going to go over now the round numbers. Bear with me, I'm going to load up my other screen. All right. So here we have a chart set up, and you can see the different levels of round numbers here. Now, round numbers are 50s and double O's. So you might experience, for example, on say the let's say, I don't know, any chart. We'll just make a hypothetical example in which we'll do 1.00. You might see that level, and you might see a 1.50, and then of course you have a 2.0, which is going to be a level. These are going to be round numbers where price typically reacts. It's more so a psychological level that people recognize, and at any rate, the market is controlled by various different types of people who will be interpreting these informations. Now, everybody views these numbers differently, but some people use them as indicators on where price may react, and some people see them as places where price may retrace to. So at any rate, we're going to be using them as a exit indicator, not as a guiding indicator, and where we're going to be looking to anticipate price going. We're just going to use them where if price is near a round number, we're going to be looking to close out a little portion of our trade. So in this situation, of course, we have the swing high here, and we have the round number first. So the round number, we'd be closing out a small portion, perhaps 25% of our trade at this small round number, and then we're going to be closing out a 50% of our trade at this level here, given that they're both fairly close together, but this one is just a little bit more significant. So we close out 50% of our trade here. And now that we're about 50% of our trade done, given we entered around here, we closed a bit of our trade here, we closed a bit of our trade here. Now we just have this level and this level left. We have the 1.5 level where we're now out, we're closed our trade about 50%. We have still 50% of it running. We can close out another 25% here at this level, and then we can close out another percent of our trade here at this level, which will give us our 100% if price ends up going all the way up to here. Using these round numbers, we can project that if price continues to go up, this is where we close a significant portions of our trade, not as much as we would trade or close in a previous swing high or swing low situation. Like we see here, we always close out a higher number for the previous swing high / lows than we would for round numbers. That's mainly just given there's more round numbers than previous swing highs that are actually relevant on the chart. Now, I say that loosely, but in most situations, you'll find that there is a lot more round numbers on the charts than there are swing highs and swing lows, especially when you're in these given intra-week scenarios. You're only going to usually find a couple points before the market is looking to break out and give us our entry signals. But as far as the round numbers goes, you would be looking at the 50s and the hundreds. And as far as closing portions of your trade, when it comes down to the previous swing highs versus the swing lows, you're going to be closing out at least 50% of your trades at those levels. And when it comes down to round numbers, you're going to be looking to close anywhere from 15 to 25% of each of those trades as you encounter those levels, or as price encounters those levels. And that'll pretty much guide you. And if you have a mixture of both of those levels, prioritize whichever levels are coming first. So if you have a round number, say 30 pips ahead of the previous swing high, you're going to go ahead and close 15 to 25% of that trade at the at that round number, and then close an additional trade, like what the rest of the position up to about 50% at this level right here. And then you're going to go ahead and be able to consecutively or subsequently close out various portions of your trade relating to the other round numbers. So be it 25 more percent and then a final 25%, or if you wanted to close out more here and leave just a little bit left here, it'd be up to you, and it's all preference at that point, as long as you're sequentially closing out your trade to book profits along the way. That's pretty much the driving factor in which I want to like drive home on this one. Next, we're going to be talking about the ADR projections, which is you can see that similarly on the chart examples that I went through in the previous video, but at any rate, we can recreate that example here. Let's consider this is the extreme of the ADR. Let's just assume this is the extreme of the ADR projection for the day here. And then we have another ADR projection here. It's not a very straight line, but you get the gist. ADR projections, they appear in random different places in regards to the daily price movement in terms of pips. So we'll have this zone here and this zone here. Yes, you have this swing high here. We're going to act like these round numbers aren't here necessarily. Perhaps in any case, we're going to be just looking at the ADRs. So we have this bounce up here. We have this entry signal where price is bounced off of this previous resistance level, now acting as a support level, pushing price to the upside. We have an ADR projection to the bottom, and we have an ADR projection to the top. Now, obviously, we see the market flow headed in up direction. We're not going to be looking to worry about the ADR projection to the low. We're going to be looking to aim for the ADR projection of the top, given that's where price seems like it wants to be going. Of course, you can close out a portion of your trade at the previous swing high, but beyond that, if ADR projection is the only next line, then you're going to be looking to close out the next portion of your trade here. And in this case, you have two profit targets. Your first profit target here, and then you have your second profit target here. And your first profit target, you would be closing out always 50% of your trade. And then your second profit target, you would be closing out the remaining 50% of your trade right here at this level. And granted, sometimes you'll see price continue to go further. Don't worry about that, because oftentimes, as long as you're making these decisions if your system presents you another trade, you'll be able to take advantage of that as well. But just in the event that price continues to run on and it doesn't necessarily make any valid pullbacks or give you any entry signals, do not worry about it, because there's plenty of opportunities, as you see with these patterns. And using a method where you're breaking down various charts at the same time, or at the beginning of your trading session at the same time, filtering out the ones that aren't meeting any of the criteria and you don't recognize any trading patterns on, and then being able to highlight and really focus in on the ones that are moving in these tradable patterns, and then also being able to take advantage of the opportunities, and then exiting and managing your trade using the sequential targets. You're able to really take advantage of all the opportunities that get presented to you, and you don't have to worry about missing out on trades, because as we mentioned, there is plenty of opportunities to go through the same process on just another chart. So that pretty much wraps it up for this specific video on sequential targets. I really do hope that was able to be helpful. This is just how we're going to be going through every single trade now. It's going to be second nature at some point, but right now, just work on the idea of getting familiar with previous swing highs, noticing those round numbers, and if you do have the ADR projection indicator downloaded, then you can just use that, upload that on your chart, and it'll automatically plot these upper and lower extreme levels of the ADR projection on your chart. It'll do it automatically, so you don't have to visually look for it anymore. It will just be there for you. We went through that. We talked about how you would close 50% of your trade at previous swing highs. Round numbers, you would close anywhere from 15 to 25%, and then ADRs, if it is in conjunction with just one other level, such as a swing high, you're going to be closing out 50%. If you're in a situation where you have round numbers and you have a previous swing high, you would treat this exactly like you would treat a round number and close out a position of your trade at this level. And since we're doing intraday trades, if the ADR for the day has been hit, then we are going to simply close out the remainder of our trade and treat it as an ultimate stop, given price can always go further, but that is where we're going to end our trade personally, especially if there are no other structural areas to aim for beyond that. We are simply going to close out our trade at the ADR and wait for price to either give us another entry on this chart or look in another chart and be satisfied with the pips that we have made. That's it for this video, and I will see you at the next video. Bye for now.